Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brendan Ahern, Chief Investment Officer of Krane Fund Advisors, to discuss opportunities in China and emerging markets and two ETFs that capitalize off of those themes. Brendan, it's great to have you with us. Welcome to Trade Talks.
Thank you. Great to be here, Jill.
Tell us about CICC and a little bit about CraneShares.
So CraneShares was founded from Jonathan Krane, our CEO, who lived in China beginning in the early 2000s, where he built a successful business geared to China's rising urban middle class. After a decade or so in China, he moved back to the United States and couldn't believe how much the ETF industry had grown. But when he looked at the China ETFs, they were all geared to old China economic sectors. Very high weights to financials, energy, industrials, materials. And that was very different from what he saw in China, of how they've evolved their economy into a consumption-driven economy, just like here in the United States. And that was really the basis for the founding of CraneShares.
How well do you think China responded to COVID-19, and in turn, how has the economy responded to that?
So China, like many countries in Asia, unfortunately, they've had several of these pandemics over the last 20 years. SARS, MERS, H1N1. Therefore, they've taken these quarantines very, very seriously. And they implemented in the first quarter a very strong quarantine that really snuffed out coronavirus in China. That allowed China to return to work. To some degree, that was out of economic necessity. The economy had come off very, very dramatically during the quarantine. But the effective quarantine has allowed China to get back to work, and we're seeing a V-shaped recovery in China today.
Part of the challenge with analyzing Chinese data is that you're really reliant on government data. What else do you look outside to gauge the health of the Chinese economy?
Certainly, it's 2020. We're not relying on government data. This is a mobile surveillance device that all the things we do on our mobile phones are being sold. And that's very much true in China as well. So we can hire satellites to measure pollution data, which unfortunately is back to pre-coronavirus levels. Within our mobile phones is a GPS. That GPS tells us in China how quickly cars are traveling in the major cities, and they're moving very slowly because people are back to work and there's bad traffic. So particularly in the case of China, in terms of high frequency economic data, is their adoption of technology and mobile payments. All of that data is for sale. And we can see from the mobile payment data that these are back in stores, they're back spending money today.
Well, let's talk about how investors can participate in these trends. Now, KWEB aims to capitalize on a key part of the Chinese economy. Tell us more about that ETF.
So KWEB was developed over 7 years ago. We launched it in August of 2013, and we've actually outperformed the S&P 500 since inception. And that's because KWEB is very specific to holding the internet and e-commerce companies that are the transmission engines for domestic consumption as it occurs online. So unlike many China ETFs with very high weights to financial, energy, industrials, materials, KWEB doesn't hold any of that. It solely holds these consumer discretionary communication companies that are allowing the Chinese to participate in retail sales as it occurs online.
Are you starting to warm up to emerging markets?
You know, it's been a terrible decade for emerging market investors. An element of this has been a commodity bear market, a very strong dollar. But another element is that nearly half of the definition of emerging markets are in these slow, low growth sectors. These value sectors have been out of favor for over a decade, and therefore broad EM, which has done less than half of the S&P 500 very, very poorly. But if you pull out the growth element of emerging markets, similar to what we've seen in China, you're seeing these growth companies within emerging markets are outperforming.
And to wrap up here, how does KEMQ capitalize on that?
So KEMQ takes the KWEB thesis of internet e-commerce companies are the trans engines and applies it to broader emerging markets. And many of the trends that we've seen in China in terms of online retail sales coming faster than traditional stores is playing out across Asia, particularly in South Korea. It's also occurring in Latin America with companies like Mercado Libre and PagSeguro in Brazil.
All right, Brendan, great to have you with us. Thanks so much for joining us on Trade Talks.
Thank you, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.